accepting to do this session on credit appraisals. For a very long time, we have wanted to have somebody from the banking to come and talk to us. Guys, all of us are consumers of banking, but many of us, though we might know about the products that a bank offers, we might not be very familiar with how a bank approaches such products when they disperse is to consumers like us. So Ranjith, welcome Ranjith. So Ranjith had been in the banking for nearly 20 years now, more than 20 years right now. And very interestingly, all these 20 years, he has been on the credit side, which essentially is about in the banking industry, the terms that they use is slightly different. So for us, a loan is a liability. In the banking industry, a loan to the bank is an asset. So he has essentially been on the asset side of a bank in terms of disbursing loans. And that too, he has been playing a very important role on evaluating creditworthiness of his consumers. And who are his consumers? It could be a factory. It could be somebody who wants to buy heavy equipment. It could be individual customers like you and me, whether it is education loans or personal loans, or is it home loans or a vehicle loan or housing loan. I'm sure all of us have at some point in time would have had such loans, or some of us might still have such loans. And more importantly, I had requested Ranjith also to talk to us about today we all know about CIBIL ratings. And we all have a CIBIL rating apparently with the government. And there is a link between CIBIL rating and how we are seen by the banks in terms of creditworthiness. So he's also going to be talking to us on that. And I will also spend some time to talk to us in terms of what financial prudence, when it comes to loans and other things, we as parents would like to teach our children. So he will be spending a few minutes on that as well. So that's what Ranjith has come prepared to talk. Ranjith, we are so keen and eager to listen to you. So you have a wealth of knowledge and experience that you would like to share. So please go ahead, and we are very keen to listen to you. Over to you, Ranjith.
Thanks, Bolaji, for the excellent intro, actually. And this is Ranjith, you all know, actually. I'm with ICICI Bank, currently with ICICI Bank since 2004. Prior to work experience, let me cover my personal side. I have a housewife and two sons. The first son is doing engineering in Amrita University, Coimbatore. Second son is 10th equivalent. He is a special kid, actually. So he is undergoing a special education. He's doing his 10th equivalent grade. And presently, I'm based out of Madurai. Prior to ICICI, I was with various organizations. You all know 1996, I passed out. From 1997, I started working in many institutions, actually. Precisely from 97 to 2001, I was in various technical companies like K'96, Dual Directors, Tamil Nadu Newsprint and Papers Limited, and lubricant industry. So it gave a lot of experience in terms of on the technical side, actually. Accidentally, I came into this. It is not a planned one, actually. Accidentally, when I was working with K'96, I got an opportunity in Cholamandalam Finance. You all know Cholamandalam Finance, which is a Murugappa Group company based out of Chennai. So they are started recruiting people from the tire industry. This is the story how I moved from a totally a different background of technical side to and finance side. Actually, it was a totally an accidental move. And later I learned a lot of things. Actually, I was having a zero knowledge on finance. First day when I joined, there was a calculator given to me. It is called financial consultant, FC. Okay, and I was undergoing from ground training to then later I became a sales officer. Later I one point of time I was a branch head for Cholamandalam Madurai. Then I was with HDFC Bank for some time, about a year. From 2004, I'm with ICICI Bank. Covered almost across half of India, like South India, west part of India. Now I'm back to Madurai because of my personal requirement, and even the position also got created. All along, when I joined in 2004, I was in commercial vehicle loans, which caters commercial vehicles, construction equipments, and the medical equipments. So I was handling close to 19 years, 17 to 19 years in that particular territory, and across various states in entire South India and west part of India. And when you work across various territory, you will get a lot of exposure. So maybe language may be a barrier during initial days, but it got over within a couple of months actually, because everybody understand English and a little bit of Hindi will help us to sail upon actually. And later I moved back to Tamil Nadu. Now, as a part of a new strategy, bank has decided to merge all the vertical as a single vertical, under one roof, credit under one roof. The idea is customer is same, the same customer, where the requirement is different. So instead of it going to a multiple person, one person can understand and he can address all customer requirement at once. So the idea is to improve 360 requirement of the customer. So by doing this, organization is really achieved a greater heights in these days. You will be seeing a lot of results coming against this organization. Okay, whatever presentation which I'm making is not on the part on behalf of ICICI Bank. It is purely a personal experience which I'm sharing. So it is nothing to do with ICICI Bank. I'm giving a note on this. Just a minute, Balaji. The screen is this one. Now it is okay. I was unable to view the screen. Now it is fine. And just to start, bank, like Balaji had rightly covered, assets, liability, and assets are the very two pillars of the bank. Both will go hand in hand. Without liability, asset will not be there. Without asset, liability will not be there. You all know basic function of the bank. Collects the money from the customer, like in the form of deposits, savings account, current account, and other investment products, and which in turn they will use to lend to customers and earn interest and pay back to the shareholders and the customers. This is the basic function of a bank. Here, the credit departments does a critical role of lending, where to give money, because the money principal has to come back along with the interest. That is very critical. So I'm part of retail assets product team, which constitute. I have given a slide which you all know. Basically, retail assets is into two broadly classified into two segments, like secured assets and unsecured assets. Mortgage, auto loan, two-wheeler, commercial vehicle comes under secured assets. The reason it is secured, reason is mortgage. You all know it is comes under registration, and it is getting MODT is getting done. So pledging is happening. So it is with the bank custody, and it is completely secured. Entire document is with the bank, so it is called secured assets. Same way, auto loan, your RC book you can check. There is a hypothecation clause will be there. So hypothecated to so and so bank, it will be there. So it is till the end of tenor. It is going to be with the bank. Hence, it is called a secured loan. Two-wheeler also same case. Two-wheeler, auto loan, and commercial loans. All the three loans are vehicle loans, where registration happens with the RTO, and the bank endorsement is going to be there in the RC book copy. So once the loan is getting over, you will be getting an NOC from the bank. With that, you can discharge the loan from the RTO. This is the model. That's why we call these assets as secured assets. Unsecured assets, your credit cards, personal loan, education loan, without any collateral, these loans are given to the borrowers based on their individual credit history. Next, James. Credit decisions. Next, I will be covering about the credit, basic credit decisions. Next, James. Broadly, three parameters: basic ability to repay. When we look at a proposal as a credit manager, I'll be looking at first thing is ability to repay. Next, intentions to repay. What is the intention of the customer? Next, contactability of the customer. These are the three critical basic parameters. If any one of this fails, then it is going to be a risk on the bank part as well as for the customer side also. So the ability to repay, intentions to repay, contactability. These are the basic pillars of credit decisions. Next, James. To elaborate these points, we made it as a simple area. What are the pointers? Capability to pay, which means under capability to pay, we check normally as a credit manager, profile of the customer, what is the income of the customer, family, what is the size of the family, how many dependents, residence and office details, location of the borrower, banking, net worth, which is called capital. Okay, these are very critical. Each line item is very, very important. Even take a case of a location. Why location is important? Tomorrow, customer is not paying back. We have to go and reach back the customer. So the location is very critical. I'm just giving an example. Next is intention to pay. Intention to pay, how a credit manager sitting in an AC room will be able to understand the borrower through repayment, his previous repayment track record. Now, clearly post 1998, I think CIBIL introduced. We started all the financial institutions and banks started using CIBIL. I'll be covering about CIBIL in detail in the next couple of slides. CPCS. CPCS is nothing but an internal parameter kept in the bank to run its own due within the bank. So, being a 25-year-old organization, it will be having its own database of past delinquencies and present delinquencies and past clear references. Everything will come out in CPCS. Posidex. Posidex is nothing but this is also an internal parameter which runs its own engine and which gives all the positive matches about the customer. So this will help us to understand what is the previous exposure given to the customer. We will add back so that the net amount given to the borrower, total exposure given to the borrower is verified through Posidex. Triggers. Triggers are various triggers which is coming across your repayment, CIBIL, CPCS, Posidex, everything is called trigger. So triggers may be a positive also, negative also. Bouncing. Clear bank statement. Bank statement is a very basic requirement for any loan appraisal. So if any bouncing is there, it will be viewed negatively. Currency is the platform approved by RBI, which gives the complete information about the customer till yesterday. So this currency is a normal, common people cannot access currency. Currency is only for the banking and finance platform. Contactability. Contactability is residence office, daily discussion, reference check, your permanent address details, field visits that directly when the deal size is very high, 5 crore, 6 crore, 10 crore, personal discussion will happen with the borrower. So such time the field visits are very critical. Geo limit tagging. Now all technology items have come up. Banks are moving towards technology. So geo tagging will give a clear-cut location of the borrower. Domain check is there, you all aware. The next is collateral. Collateral, what is the collateral? The whatever asset which we are going to fund. In case of a commercial vehicle, whether the asset and profile matches in terms of auto loan. Well, I'll give you an example. Suppose a customer is upgrading from a Maruti 800 to BMW. What will happen? So I see n number of cases where the basic check is asset and profile should match, and the upgrade also should match. The upgrade should not be an alarming upgrade, like going from a Maruti smaller vehicle to a high class luxury vehicle. So this is the trigger actually. Owner contribution, which is a margin money. We call it as margin money. LTV is a loan to value. Loan to value is very simple. The asset cost divided by what is the loan you have taken in percentage. Suppose the asset cost is 10 lakhs, 80% is the bank is funding 8 lakhs is the loan amount and 2 lakh is the customer equity. So 80% is the LTV. So types of collateral, it depends upon the product what we fund. If it's an auto loan, car is a collateral. If it's a mortgage, house is the collateral. If it's a LAP, loan against property, the land is the collateral or the house is the collateral or commercial property is the collateral. So the meeting internal and external complaints. So time to time, no, we all the banks are comes under RBI governance. So whatever the policy and latest amendments given by the RBI, no, which we have to follow. A lot of audits are happening across this area. And broadly, no, credit risk, market risk, operational risks are all are interconnected risk. If we are failing in any of the parameter, na, which will lead to a loss to the bank in terms of credit risk. And risk are because of any forex changes. Market risk is nothing but your any economical, geoeconomic, political issues and other thing, commodity cost changes and all those things will have impact on market risk. Operation risk, you all know, technology related, too much dependency on technology will also be a problem. We need to maintain certain bypass or plan B to control all those things, internal controls. So these are all operation risk line items. Next, James. So prior to going to each product, CIBIL, when I get a file as a credit manager, immediately I open every case will come with a PDF attachment or a link to a CIBIL. I'll just click the link and it will open up. It will throw a report. If it's an individual, it's through a report. I'll just give you a brief on CIBIL. CIBIL is TransUnion is an American multinational company which is based out of India, now operating in India, which is a highly accepted entity in India for the credit report area. We have multiple other 2 to 3 other companies, similar companies, but a majority of the reports are from CIBIL only. Everybody says CIBIL. So CIBIL holds close to 600 million individual database of credit history and close to 32,000 corporate, that is MSME database, 32 million corporate databases there. This is the size of CIBIL as on date. So much of database is available, which will give clear-cut data to lender, NBFC or banker. They will go through the report and they will decide the case accordingly. This is a clear-cut tool to understand individual CIBIL score. Now let's talk about individual CIBIL score. You and me will have the CIBIL score. Basic detail to generate a CIBIL score is we need a address, PAN card, and your full name. These three things are enough. You additional fields are your mobile number or a passport details, everything you can key in, which will give more accurate results actually. PAN card is a basic requirement. So when you next, when you get a report, the report will throw a lot of information. It's a very depends upon the customer borrower profile. It will give multiple pages. Some reports will be even 50, 60 pages, 80 pages, 100 pages also. So there is a top, on the top of the report, there will be a score called CIBIL score will be there, which is a 3-digit numeric summary will be there. How this three-digit numerical summary is formed? It is based on your own credit history, past credit history. Okay. Some message came. We will be taking the questions later, right, Balaji? Yeah. Okay. And so 3-digit numeric is there. So this is based on your past credit history. And score is directly connected with your number of inquiry you make. Suppose you approach a bank for a home loan. Instead of giving a file to one bank, you are giving the file to 3 banks. or you the DMA, the direct agent who's approaching for a business, he take a copy, multiple copy, give it to 3 banks, and the CIBIL will show 3 inquiries instead of 1 inquiry, because everybody will go and search, key in your name, and they'll put it, and the inquiry will get generated. Higher the inquiries, lower the CIBIL score. It will have a direct impact on your CIBIL score. So, my request is, whenever you approach for a loan, please keep in mind, try to approach the bank directly instead of through any agency or any intermediate person who's not having direct employment with the bank. I appreciate always go to the bank, and or if you have a contact, approach through the particular person. Number of inquiry will have an adverse impact on the CIBIL score. The same way, how your credit health, why CIBIL score is more important, I have told you already. And how does information get on my CIBIL report? I have given, please go through that. It collects the complete data that they are having, all your individual credit database as well as the non-individual, your commercial entities database is also there. How we can improve CIBIL score? Simple pointers I've already given. Always pay your dues on time. Keep your credit balances low. Apply for a new credit in moderation. Maintain a healthy credit mix of secured home loan, auto loan, and unsecured loan like personal loan, credit cards. That mix should be there. It's not only secured loan, only unsecured loan. That will give you a lower score actually. Monitor your co-signed, guaranteed, and joint accounts. This is very, very critical. I have come across lot of cases where the individual borrower A is approaching the bank. He would have signed for as a co-borrower or a guarantor for somebody else. Even if that person B is not paying, A is going to get impacted, and your credit score will go down for sure, 100%. Till date, he is not regularizing the account, no, your score will never improve. So whenever you are signing for somebody else, unless otherwise you are blood relative within the family, it's fine. You have a total control. A known person, like you are signing a personal loan for a friend, he will not pay, then it is going to impact. Many cases I've seen in live cases I'm seeing every day actually. So whenever you are signing for others, please be careful. Review your credit history frequently throughout the year. Once in a year, apply for your credit report. You can directly purchase this report in a CIBIL platform by paying a nominal fee, and you can get the complete report. When a bank sees a report, suppose a customer approaches a bank A, only the bank A related information will be shown as you are having bank A relationship. So these are the traits available. Other bank relationship, if you have multiple other bank relationship, that will be shown as undisclosed. So the bank A will not know which bank, other banks you are having the relationship. So it is not completely disclosed to the bank A. But if you purchase a report on your own, then that particular report will give you complete detail of all the loans which you are having, both your unsecured and secured loans, along with the particular institution name. So it is very clear you can go and approach if you have any disconnect. Even if you have any adverse remarks on the CIBIL report, you can raise a dispute. Appraisal forum is there. Just visit CIBIL. You can find out all details. You can raise a dispute, and with a relevant proof, it will go and get addressed within a particular time frame. Next, James. Like individual, we have for corporates, like even for proprietorship firm, partnership firm, private limited, public limited firm, we call it as MSME. We have a CIBIL parameter, which is called CMR. CMR, CIBIL MSME rank. In short, it is called CMR. CMR is like your CIBIL score for individual is starting from 300 to 900. The better score for an individual is 750 and above. In present scenario, If you are having an individual CIBIL score of 750 and above, high chances of getting loan is there. If you are having a CIBIL score of between 700 to 750 in individual category, the chances of getting a loan is high, a little lower, but you have to give clarification. Suppose one loan you may have a little default, some credit card overdue, some DPD, something will be there. So you have to give clarity to the bank. Suppose your CIBIL score is less than 700, then it is very tough to get your loan getting processed with a particular bank or NBFC. So CIBIL MSME rank, so that is on individual part. With regard to CMR for the corporates, all the entities will have, here the score starts from 1 to 10. Lower the score and higher the ranking. So suppose some MSME is having a score of 1, which is a better score, excellent score. If it is score of 10, it is a worst score actually. So here your MSME with the exposure of 10 lakh to 50 crore. MSME with the exposure of 10 lakh to 50 crore only will come in this report. Any MSME which is going. Hello. So any MSME which is going beyond 50 crores, this will not come under this report preview. Then we need to refer other credit rating agency reports. Next, James. James, next. So, like I told you, CMR rank category is been given. 1 to 3 is a good track record. Credit worthiness is high and very easy to get loan. 4 to 7 is having some failed applications, but they won't become NPA. It is not NPA, but still there is a DPD. Delayed pending cases are there. There are some application is having a problem. Because of that, the score has gone down. Moderate might have a certain roadblocks. He has to give a clarity to that credit team, and they may consider, they may not consider also. And 8 to 10 is a worst score. There are high chances of this will become NPA and course of next 2 years. So definitely credit team of that particular entity will not take a call on this. Ways to improve MSME, like individual CIBIL score. Here also you can improve the CIBIL score by revolving your cash credit account, overdraft account, and maintaining a proper trades, financial trades, maintaining optimal finance trade balance. Suppose you are having a working capital loan, ODCC, don't go beyond 75% of your limit. Suppose you are having 1 crore limit, don't go beyond your 75 lakhs. So maintaining within that limit, 75% will give a better scoring score to the MSME rank. Conclusion is like individual score. This is also very critical because many of the even now this particular MSME rank is getting checked for even proprietorship firm, partnership firm, and LLP firms and private limited and public limited. So this is very critical for all the MSME entities. Next, James. Let us cover now. I have covered on the CIBIL part. So any questions on CIBIL, I will take it up later post the presentation is over. Now we will go to product-wise presentation. Personal loan is a very simple loan in a bank actually. Majorly, the category of customer approaching personal loan is a salaried profile and salaried doctor, government entities and armed forces, NRI profile. We also cater NRI profile segment, and this end use of this personal loan may be for any purpose, your home renovation, education, holidays, marriage, purchase of any durables, and any personal emergency. You can use for any emergency. There is no limitation because of this kind of easiness. Many people prefer taking a personal loan actually. Next. These are the type of personal loan which bank will give, like a fresh loan. You can take it as a fresh loan. or you can take it as a top up of existing loan. Top up means you all know actually some loan is already running. You can take an incremental loan on top of it and top up with the external balance transfer and top up with the co-balance transfer. Suppose customer is having a loan with other bank, I can take over that loan by paying the other bank directly actually, and giving in a top up to the customer, additional to the customer. Also, multiple loan can be given based on the profile, which is called parallel loan. EXBT is nothing but external balance transfer running with other from other financier and bank. And I'll give a small brief about personal loan. How we calculate a personal loan. A simple formula called FIRE. FIRE is nothing but fixed obligation to income ratio. It is simple. Your total obligations, current obligation, and your proposed EMI. We will simply add up. We'll get a value divided by your total income, net income. So it should be ideally between 55% to 75%. So bank will always fund between this range. Your total obligation divided by net income, that is your salary, should be in the range of 55 to 75. So bank will consider from 55 to 75, depends upon your category of salary. All banks or NBFC will have an internal parameter, like they might have a company-wise priming companies, then a set of A company, B company. So the company categorization is also there. So based on the company categorization, the amount, loan amount given to the borrower may vary. Even the interest rates also may vary. And so obligations, whenever they calculate obligation, no, I'll just throw some light on obligation. Any term loan which you are having, any fixed EMI loan, the 100% of your obligation will be considered. Suppose you are having a gold loan, only 1% will be taken as an obligation. Suppose everybody will, all are using credit card. Credit card may, suppose you are having an overdue, 5% of your outstanding will be taken as a obligation. And suppose you are having an overdraft account, 1% of your outstanding will be taken as a obligation. Suppose loan against security you are having, again 1% will be considered. These are the obligation part. So precisely your CIBIL will also throw light on your existing obligation. So the credit manager who's going through the profile will calculate all the obligation from the CIBIL. Also now system has come up. So system will auto pick up all those information and it will throw a complete information of your obligation in a smaller box, like total obligation divided by your net salary, which will simply throw the FIRE. FIRE is fixed obligation to income ratio, which is a basic ratio calculated for all type of loans, be it your PL or a home loan or auto loan, everywhere this FIRE is applicable. And any loan which is getting matured within a year, suppose within 3 months, then we may not consider an obligation because it's getting over in 3 months. Such waiver you may get it in some banks, but it depends upon the banks and financial institution internal policy. So broadly, whatever I told now, it will cover up in FIRE actually. So the FIRE is the basic criteria when you approach a bank. You yourself can calculate your FIRE before going to the bank. So you will have a fair idea whether it will get through or not through. So your CIBIL score and FIRE, you will get almost get a 70 to 80% of a clear-cut idea. And we also cater NRI because many friends are from NRI, people are also there. We fund NRI also for personal loan for emergencies. In case of NRI, an Indian co-applicant should be there, which is mandatory. You all know why. Because on the collection perspective, tomorrow if the loan goes bad, the local person responsible need to answer and respond. So that is the reason we always take a co-applicant or a guarantor from India. who may be a blood related. Mostly most of the cases it will be Indian borrower, actually Indian co-applicant or guarantor. And the amount, disbursement amount of personal loan will always go to an NRO account, not NRE, NRO account. Repayment can be taken from NRE account, And this is about personal loan. We cater NRI as well as Indian individuals, salaried profiles in personal loan. Next, James. So generally, when a credit manager will have a PD, personal discussion with a borrower, a particular customer, you can anticipate these kind of questions from them so that you are well prepared. Suppose you can answer them in future. Actually, if you are getting these kind of questions, generally they inquire about a family background, educational background, which will give a profile idea, and the other source of income. You may be a salaried, you may get another income. So other incomes also considered for certain cases like home loan and all. Other incomes are considered as a part of income. Residence and office stability details will be asked, and other income source of family members. Your family, other family members may have different income. That detail will also they will ask. Asset base of the applicant or family. What is the existing? So suppose we are approaching for a car loan. What is the existing car you are having? What is the car model? All those things details they will ask. So just for a balance transfer, see, always now they may ask for a other additional opportunity with you. Suppose your CIBIL is good, track is good, and your behavior is good, and everything, your banking, everything is good. They will also try to pitch other opportunities with you. And uh, uh, suppose your CIBIL is showing some kind of default, any DROG is there, the CIBIL. So DROG detail will be asked with you, which is very critical. You have to explain actually why the default has happened. Any return, it depends upon the case. Suppose you are having an overdue on so and so card, you are asked to you have to submit a proof of clearance. After that only they may clear the loans. And recent loans taken, which is not reflecting in CIBIL. Credit manager, while going through your case, he will go through the inquiries also. You may have a recent inquiries in the past few months or even past month. He may ask, and which is not reflecting in your new loan. Loan will start with the string actually in CIBIL actually. So there is an inquiry in your CIBIL, but there are no loans added in your CIBIL. That means somebody would have rejected also your loan. So he will, on the suspicious this thing mind, he will ask actually. So if you are having a genuine information, or then you can share such information with a particular credit manager who is doing a personal discussion. Proposed, you will ask for the proposed exposure detail, why you need the particular vehicle or end use of that particular this thing. Suppose you are approaching for a loan against property loan, you will ask for what is the end use of your funds, where you are going to deploy. All those information you will ask. Next, James. And customer interaction to the credit manager, these are the common questions we get from the customer. We have put up here actually. What is the maximum loan amount? What is the interest rate you will ask? And where you will give disbursement? What is the foreclosure charges? If I close the loan, what will happen? How much is the processing fee? What is my CIBIL score? Residence verification mandatory, whether you will come to my residence or not. Insurance is mandatory for the loan or not. How I will get a repayment schedule? Can we do a balance transfer of X bank? Suppose he is having another bank loan. If we want to do a balance transfer to the new bank, he may ask such questions. These are the questions we got it actually from the customer that we shortlisted and we gave. Next, James. Like similarly, PL is for individual personal loan. So similarly, we have a product called business installment loan, which is called BILL in short form. BILL is nothing but a loan to self-employed professionals. Okay, not to an individual. It is for self-employed professional doing any trading activity, even for a hospital, nursing home, any trader doing any kind of business. So he may approach us for this thing, loan. This is totally unsecured. We give bill up to 1 crore, without any security. Beyond 1 crore will go with security, but up to 1 crore is without any collateral. Actually, that's the reason it is coming under unsecured loan. So bill, next, James. So these are the target customer for bills. Actually, we can see professionals of CACS, doctor, architects, and any business community, okay, and non-professional divisions. So all these wholesaler, retailer, manufacturer, architects, CACS, hospitals, self-employed doctors, proprietor partnership firms. See, doctors may require equipment, non-standard equipment for their hospital. Such funding will be used for purchasing this OT tables, monitors, and all those things. So we frequently get cases from doctors on bill, doctors and traders. No, they CACS, all such profile will approach us for business installment loan. This is a equated installment loan, which is a constant EMI, and rate of interest is fixed. The same case with the personal loan also, the rate of interest is fixed from the start of the tenor to end of the tenor. Your EMI is constant and your interest is constant. It is not floating rate of interest. It is fixed rate of interest. Next, James. And here also, bill, before going to mortgage, let me cover a couple of points of bill. Business loan is similar actually. We calculate whatever I told no on the obligation part. FOIR calculation. FOIR calculation remain the same for business profiles also, but slightly different percentage bank may consider, because generally now the business profile, they don't declare complete income to the income on their papers. You all know business profile generally they don't pay complete tax whatever income they are making. So based on that ground, the bank or NBFC will have a little bit liberalized FOIR norm for bill, business installment loan for this trader profile. In such cases, we may go till 100% FOIR for such profile. That means your obligation divided by your total income is 100%. For a PL, I've already told you, for individual, it ranges from 55% to 75%. Whereas for business profile, we go up to 100%. Even CACS and doctor profile comes now, we may take a little bit deviation and we go up to 110% or 120% FOIR also, because we know such profiles are not declaring 100% of their income. They have other incomes. So that is the question we are giving to self-employed profiles. And this is about business installment loan. And coming to mortgage loan is you all would have come across definitely the mortgage loan, which is I personally call it as a killer loan, because longer the tenor, higher the loan amount, which will completely take all your earning actually. So I'll give you some suggestion at the end of this actually mortgage loan. Let me cover the appraisal part first. And with respect to appraisal, here also mortgage loan, you all know the funds is used for purchase of real estate property. You can buy a second-hand property, existing property from the other owner. So lien is put up on the property is being mortgaged. Loan is secured on the borrower property. Next, James. So these are the product offering under mortgage loan, like new home loan, land loan, residential land loan, and land loan which is used for commercial purpose, non-residential premises loan, and which is rented premises. We call it as tenant occupied property. So loan against property we give. Balance transfer. You are having a loan with other bank, we can take over such loans. One surprising factor is, I'll tell you with respect to balance transfer, close to all the banks, close to 40% of their businesses balance transfer only. That means the loan running with one organization goes to the other organization. So close to 35 to 40% of the businesses balance transfer. We call it as BT. So this is one fact I'm giving. And top up loan on the existing loan, if you need an emergency requirement of funds, you can take a additional loan without having doing any other this thing. The simple top up loan on top of your existing loan. And specialized properties like your school, warehouses, industrial, hotel, and hospitals also we fund. And we also give a LRD, which is called as lease rental discounting, based on the this is quite famous in commercial building, where the customer having a commercial building renting it to profiles like Trends or Bata or any other bigger corporate bigger profiles, and they'll be getting a rental income, and the rental income will directly come to the escrow account, and which will, so the whole process is called lease rental discounting. Next, James. We'll stay here actually. I'll cover up a little bit on mortgage loan. Mortgage loan may we have obligation criteria similar to here also we calculate fire. Fire is again we are going back to fire for a salaried profile approaching the bank or financial institution for funding. We take their existing obligation part. Let me cover the obligation part in detail. Term loan EMI is completely taken. Gold loan is taken as 1%. Credit card is taken as 5%. OD is taken as 1%. Loan against security is 1%. Suppose you are having a loan, other loan, outside loan, which is getting matured within a year, then we don't consider. If existing EMI paid by a co-applicant, suppose it is not by from your salary, it is getting paid by your wife, then we don't consider under obligations. That means you will get a higher chance of this thing. So and any guarantor obligation, suppose your CIBIL is showing guarantor capacity loan and the obligation is showing, such loans we don't take under obligations. So fire remain the same. The same way, FD backed loan. Suppose you have a loan based on the FD, such loans because it's a cash collateral, we don't consider under obligations actually. So the same way for a suppose you are getting a bonus for a salaried employee, we don't take 100% of your bonus as a income criteria. So whatever I covered till the FD is on obligation part. Now we will come back to the eligibility part, which is income. So income may we take your net salary as base income and your bonus, any variable pay. Variable pay will be taken as close to 50% only we will take. We don't consider the complete variable pay because its nature of pay is variable. So we don't consider 100%. We take only 50%. And any bonus that also we derive per month bonus and we take only 50%. This is the practice followed across all the NBFC and banks under income criteria. Suppose you are getting a rental income which is legally shown in ITR and your income is shown in white. In such cases, we may take 100%. Rental income can be taken 100%. Suppose if it is in the form of cash, you are getting a rental income, but it is in the proof is there, electricity bill or property receipt, everything is there. But you are unable to provide a proof of rental, then it is called cash. Cash, we can take 50% based on the other property proof or whatever you are submitting. So fire again remain the same obligation divided by obligation includes your proposed EMI. So when eligibility getting worked out for your mortgage loan, your obligation plus proposed EMI and total income divided by total income will give a clear-cut idea how much loan you will get eligible. General tenor for a mortgage loan is 20 years. So there will be a internal calculator. All the banks and NBFC they keep If they put that particular value on your fire, it will throw the loan amount, whether you are asking is eligible or not, or they will do a reverse working based on your income. How much loan amount we can give from the bank side? Suppose you are asking for a 30 lakh, but you are not qualifying for 30 lakhs, you are qualifying for 25 lakhs. Bank will come and say you are qualifying for 25 lakhs. Are you ready to take? Many times now, this reverse working will happen because your obligation and all those things calculation is done at the back end, and they'll go through the complete report. Okay. And with respect to LTV, loan to value, on the project cost, you will be getting in the range between 80 to 90% based on your income and category of income which you belong and the company you are working. These are the certain parameters. Based on that, the loan amount will be arrived. And generally, the LTV is based on the loan amount what you are approaching in the bank. But it's within the 30 lakhs bracket, you may get 90%. If the loan amount goes up, you may get 80 to 75%. Depends upon up to 75 lakhs is 80%, and beyond 75 lakhs is 75%. It depends upon the bank and institution. You may get 5% more or less. Depends upon their internal policy and parameters. But generally, it will be in this line only. Whatever loan to value which I told, it will be in this line of line items only, 90, 80, and 75. And if you're approaching a bank for a LAP, that is loan against property, you will be getting around 65% actually. Suppose if you want to take a loan against your land, that also possible. You can get, but the percentage what you get may be a little lower, 30 to 40% or 50%, depends upon the bank and NBFC internal parameter. And generally, the banks will have a they have a in-house legal and technical team. What legal team? You all know legal team. They have a lawyer panel in each and every bank. So the lawyers will go through all the document parameters and they check the complete property papers, and they will give a legal report. And another entity called a technical team, which does the physical verification of the particular property, which will give a technical report. What is your value of the property based on their own criteria. They have an internal calculator based on the area, location, and a lot of parameters are there. The resale value and government. You all know government guideline value will be always on the lower side, whereas your market value will be always on higher side. So we get a value from technical team, in-house team, based on the market value. So your LTV is getting calculated based on your market value given by the in-house technical team. Not on any other value. So your technical value, say example 1 crore, the LTV is calculated. Suppose you want 70 lakh, 70% is your LTV. That's it. I have covered on the mortgage part. We'll go to the same way. I'll cover up on the self-employed also. For self-employed
Give a
also.
sense of timing, Ranjith. I'll just give a sense of timing. So we are currently at 9. So you may have probably another 10 minutes to go forward. And if you want to take
I'll quickly cover.
question. Yeah.
I'll quickly cover up this thing.
Just give you a sense of time.
Because I also totally into this. Thank you for reminding me. And let us auto loan. I think auto loan. You all know, you all come across auto loan. We fund new car loan, used car loan, and all type of car loans like sale, purchase, top up, refinance, etc. You can give a car for a refinance also. New car loan is a very simple product in the bank based on the customer eligibility parameter. There also we apply the same logic of fire and all those things, internal calculation, CIBIL, everything plays the same part. The eligibility, but car loan, getting a car loan is very easy if you have a good credit score and income. Straight away you get a in the range of 90 to 100%. Even on road 100% also they used to fund. So getting a car loan is quite easy when compared to other loans actually. Let's move to commercial vehicles. Let's quickly cover up commercial vehicle. So I was part of commercial vehicle for long period actually. I'll just give an idea on the commercial vehicle, why it is so important for this thing. The commercial vehicle industry is very closely knitted with our economy. So any impact on economy now is the clear indicator. Commercial vehicle is the clear indicator. You all know all your vegetables or agricultural produce or any automobile components, everything comes via road only. So India may close to approximately 70% of the goods are transported by roads only. And Indian roads close to 33 lakh is the total size of the kilometer long road network we have. And 70% of the goods are getting transported via. So you see the size of this thing, and it is having direct impact on our whatever goods we are buying. No, starting from our vegetables to any product we buy on a daily basis, which is having a direct impact on the transport industry, because your fuel price goes up automatically, and the cost is getting absorbed on the vegetable or whatever. Quite naturally, the cost of the product will go up, which will have a direct impact on the buyer actually. So it is closely knitted with the economy. So any downtrend, no, immediately cover a commercial vehicle segment may you can see. Normally every 5 to 6 years there is a downtrend and it will again go up. This is the cycle. I am with the bank almost close to 20 years. I have seen some 3 downtrends so far. Next, James. So we classify commercial vehicle into small commercial vehicle, light commercial vehicle, and heavy commercial vehicle based on the GVW of the asset, gross vehicle weight. You all know gross vehicle weight of the asset. So based on that, this categorization will be done. And these are all the couple of famous manufacturers in India: Tata Motors, Ashok Leyland, Mahindra, Eicher, Swaraj Mazda, Benz, Volvo, Force Motors. These are the major manufacturers. Then their market share are given in the right side. Okay, James. These are the manufacturing construction equipment segment. Actually, Tata Hitachi, JCB, Hyundai, Sany, Cobalt, L&T, Caterpillar, Valvo, Barcelona, Bridgen. These are the couple of famous manufacturer in construction equipment space. We also fund all kind of construction equipment which is used for in the contract segment, and we do funding on crushers also. Next, James. We already covered light commercial vehicle and heavy commercial vehicle, SCV. Next, James. So this is the profile of CV loan customers. Like I already told, the transporter means he will transport of goods is the core activity. And as per the bank requirement, you need to have certain vehicle age should be less than 10 years to count it as a fleet. Bus operator, you all know we have a staff transportation buses. So passenger transport is the core business. And captive means for the customer taking the vehicle for his own purpose. Suppose a cement transporter is taking a vehicle for cement dealer taking vehicle for a own cement movement from his godown to other place. That is a captive use. Next, James. So these are the internal bank classification retail based on the size of the customer. How many vehicles he owns, and in terms of fleet, number of fleet owned by the customer as a retail customer and strategic customer. For a captive customer, turnover is the criteria to decide between retail captive and strategic captive. Next, James. Customers and eligibility. Next, James. So these are all the various entity we cover under commercial vehicle funding, self-employed, proprietorship, private limited, HUF, trust, and public trust. Trust and all will come in schools actually. We used to fund based on trust. Each and every school is coming under trust. So I'll explain later if is there any question across this. Next, James. So this is the entry age and exit age. This is for commercial vehicle, not for other product. Other product age is little higher, 21. For commercial vehicle, it's kept at 18 years, and maximum age at the end of the tenure should be 65 years. And location norms is customer principal office and other things. Each and every bank will. This is for the contactability purpose. And co-applicant, suppose the applicant is not satisfying the norms, and co-applicant is taken. Mostly, in many cases, co-applicant will be a family member or blood relative. Next, James. So TDR is all the loans tele-verification is checked. So credit manager will have a direct interaction, and there will be an external FI agency, field verification agency. They go and check the customer and share the report. And trade reference is nothing but taking feedback from the similar transporter from that locality. They will give a feedback about the customer. And the last one is very critical parameter based on which the decision is taken. Viability and hire versus buy. Viability is for a transporter, where he is running the vehicle, how many vehicle he is having, how many are finance free, what is the net income he is making in a particular per vehicle income he is making, and what is his EMI. Free cash flow, FCF is nothing but free cash flow divided by EMI should be more than 1.1. Okay. So all the vehicle after post EMI, what is the total this thing? Total income divided by EMI should be 1.1. These are all bank internal parameter kept there. The hire versus buy is nothing but for captive profile. Ownership, higher charges getting paid. Suppose if the customer is not having vehicle, he has to hire from the market. So what is the ownership cost? What is the hiring expenses? Against that, it should be positive. Next, James. Credit reference check, you all know it can be checked through a CIBIL or a statement of account given from the customer. Credit reference is nothing but your track record. Nature of credit record, ETR, excellent track record, good track record, based on the DPD. DPD is nothing but delayed pending days. So if a track goes beyond 60 days delay, which will be termed as PTR, poor track record. Banking, each and every case, you have to give 6 months, minimum 6 months banking, which is common for all the loans. So generally, a credit manager look for any inward return in banking. You all know inward return is nothing but the check issued by the customer to others and it's getting bounced, which is a trigger actually. He is giving a check and he is bouncing. That means credit related issues. And stability, we all discussed location and all those things. And fleet expansion, what is the number percent vehicle, how many is going, and it should not be more than 50% of his existing fleet. Next, James. Free fleet vehicle. See, suppose a finance, he is having a vehicle which is, suppose customer is having a 10 vehicle and 3 are loan free and 7 are financed. 30% is FFR, post funding fleet ratio. Maximum exposure, we have a bank will have an internal multiplier calculator based on that, how much exposure we can lend on the customer. Guarantor will be taken wherever the applicant or co-applicant is not meeting. We need a guarantor, we will be taking a guarantor. Next, James. We also address first-time user in commercial vehicle segment for a smaller vehicle, heavy commercial vehicle. These are the basic requirement to address the first-time user profile. Next, James. So these are the one vehicle owner profile. Commercial vehicle minimum track record should be one vehicle should be owned and 12 months track record should be there, and minimum experience of 2 years. No funding he has taken because he is already having one vehicle. So if that vehicle is again financed, no, servicing one more vehicle will be tough. So chances of going delinquent is high. So we should be careful in approaching such person. So we have kept some internal norms. And guarantor, wherever is not meeting the norm, we will be taking a guarantor. Guarantor is very critical in such profile. So in the event of default, we will be approaching a guarantor. Next, James.
That's it.
That's it. I think we are on time.
Yes, on time, Ranjith. So back to Balaji.
But so many things are there. I can't cover all line items in one call, actually. So we'll cover up later if required.
Ranjith, I think this is a very vast topic. I mean, I think you can
Yes,
can
yes.
keep talking about this for a very long time.
Yeah, yeah.
So there are some very interesting questions, right? So Prem had asked a few questions, and I'm also going to be opening up to other people if they want to ask more questions. I think that will come through, right? So now,
Yeah.
Prem's first question. Can you see it in the chat, Ranjit? I assume there are two categories. One held common across the banks, like CIBIL.
Able
Then
to see
while the other are the bank's own data on the customer, maybe like Posidex. How does a bank rate weight one data over the other when making a decision?
You can see the questions, Ranjit, or trying to?
No. I'm trying to actually. It is a tab, no? So
Yeah, go to the
the chats.
Can you James? Can you flash the chat, please?
Yeah. So I will share again.
Because
and,
we use frequently Teams actually. So Zoom.
Okay. Ranjit, I can ask the question here if it makes easy for you. Okay. So the way I understand, there are two categories of information, right? One is like CIBIL, which is common across all banks, right? Whether it's HDFC, ICICI, SBI, any bank wants a score, CIBIL is one score held for a customer. And then there will be other category, which is like based on your interactions with HDFC, HDFC might have a profile on that particular person, right? And that will be different for each bank.
Correct.
So when you have to give a loan, you have a CIBIL score, which is common, and then you have your own bank's information. So how do you rate or how do you weigh one over the other? Or is it like 50-50, or is it CIBIL takes more precedence or your bank's information takes more precedence? How do you guys determine that?
Yeah, good question, Prem. Actually, see, Posidex, which I told, no. Suppose customer is relationship in present days, no. Customers are not exclusive to any single bank. They are having multi-relationship. So I have a scope which related to my particular entity or institution. Data will be thrown in Posidex. So I can take all information about Posidex. But if a customer is a credit hungry customer having multiple relationship, CIBIL is throwing a negative match. In such scenario, I should go and ask for more detailing on such issues, because that is a trigger point. By taking this funding, you may go into further depth actually. So which will be if I miss out that this thing now, so it will be a problem. So it depends upon that. Suppose a customer having 90% exclusive relationship with a particular bank A, with the other bank B is having only 10%. The more weightage will be given for A. So it depends upon the information what we get through that particular CIBIL. But I can openly say, frankly, if exclusive relationship is there, still the outside relationship is bad. So that is considered as a bad behavior. If that is good, then it is okay. We will be taking a call based on the existing relationship. But in terms of weightage, nowadays CIBIL plays the major role more than internal information.
Got it. Thank you. Okay, I had another question. Maybe. Yeah, it's on the chat as well, but I'll ask you anyway. So the way I understand this CIBIL thing came in play even before Aadhaar came in play. So I assume that the whole CIBIL score is based on PAN card or PAN number. Is it a fair statement?
Correct.
Okay. So the PAN card doesn't change, but let's say I've relinquished Indian citizenship and taken on another citizenship. Does CIBIL treat these expatriates in a different category, or are they all the same?
For with regard to, so you, I'm asking a question to you. Are you changing? Suppose there are instances, no, I may get a multiple PAN card. So the customer may approach with a different PAN number, which will give a different result altogether. There are instances we found out that the duplicate card is available. Banks are having internal mechanism to check this duplicate PAN card. Okay, they will clearly check, and the one PAN card, so you know, as per policy, the dual PAN card is not at all allowed, and one should be surrendered, and proper acknowledgement should be taken from the authority to lend such customer. Your question is what you are saying. I'm not getting it on.
Yeah, I think.
No. So let me ask.
Yeah.
Okay, so let me phrase it differently, right? So I have the same PAN card, same number, but then I can still have the same PAN card even though I'm a different citizen, not a citizen of India, right? It could be applicable for folks living in UK, US, Europe, Australia, wherever.
Yeah.
But once I change my citizenship, does CIBIL score us differently compared to Indian citizens?
I will tell you, we also insist for NRI, no? We insist for overseas credit report. Okay. So if an NRI approaches for a secured loans like mortgage and other high quantum loans, we insist for overseas credit report. I'm sure overseas credit report will throw the lot of other information outside India. The information which is pertains to India will be taken from the Indian PAN card, whatever you are providing.
Okay.
Yeah, and another thing, Ranjit, I may not be fully correct, but if I am Indian origin, even though if I take another country's citizenship, I don't need to return my Indian PAN card. I can still keep my Indian PAN card. Is that correct?
That is correct.
I have to check and come back. I think
No,
you can keep it because
that is correct.
That is correct only because the number is a permanent account number.
Yeah,
so it will
you can
not
still
be
keep the PAN card.
It will not be allotted to anybody else. The number is going to be till end with you only. You are not supposed. You can, but there is no option of surrender also. Reason is you can take it and you can keep it. If you are coming back, you can use it. Actually, that option is there.
Yeah.
I think all the people will have
Ranjith,
Indian account. No, you need a PAN card here also.
Yeah. So you can't do any transaction without PAN card now in India.
PAN card, yeah.
Ranjit, following up with Prem's question, a very practical scenario. Say I am in India. I have struggled in my life. I have taken loans. I have tried businesses, or tried different things. The score is low. Then I go abroad, and my life opens up, and I do. Okay.
Voice is breaking.
I'll find there. Now there is such a disparity between my performance to what it was here in India. So in that case, how do you judge? Because CIBIL is still going to be very bad here, and the credit report there is going to be totally different. So would you be able to judge in a moral way? That life has taken a good turn once he has gone there, taken a good job. Is that how you judge?
Yeah, you see, suppose that everybody will have a bad patch. Okay, bad patch may your Indian CIBIL will through a particular tenor, particular year, a bad patch will be there. Your CIBIL will be showing a DPD, and all delinquent information will be recorded. Your score, say example 550 or 600. Okay, and suppose you are going there abroad and you are creating a credit history over there. Post this default period, after this particular default period, and all your existing Indian CIBIL related issues is settled, closed without any waiver, written off. See, any written off is nothing but principal write-off. Any principal write-off will be termed as a negative actually, from the banker's perspective. That means somebody has given a money and principal write-off is there. That means he is unable to pay even the principal, half of principal, or 50, even 5% of the principal. You are not paying. You are paying 95%. 5% is getting waived off. That will be viewed as negative actually. Suppose you are having only an interest waiver, principal is completely paid off. Then the way of looking at things will be little comfortable. And your overseas credit report is showing a clear credit reference post this default period, and due weightage will be given for overseas report.
Wow. So the bottom line is clear your CIBIL related issues. Don't go for waiver. It is best
Yes,
that you pay
definitely.
back. And
See,
then
definitely now. This is a good question, Sampath. This should be a information for all the friends here. So don't take any waiver on a longer run. No, you may approach the bank for future requirements, your education loan or any other loans. No, this waiver, taking a waiver and putting a strike off in your CIBIL, no, which will have a adverse impact on your any entry. Even nowadays, CIBIL is getting checked everywhere. Even not only for your financial appraisal, many things are checked. Even for India, people have started checking CIBIL for your employment also. In India, many companies are checking without checking CIBIL. Now they are not recruiting people in banks and NBFCs now.
wow. Good.
So don't take any waiver. Don't take any waiver. Please go and settle off. Don't take any principal write-off. Take some maybe an interest waiver. Interest waiver will not have any big impact. You can say my business or so and so is not doing well that point of time. These are the genuine reasons. I have taken a closure and genuinely I'm having an NOC, no objection certificate. After closure of the loan, I have taken a thing. Many credit card companies and people now. Credit card is a much affected product here actually, because when the CIBIL was introduced during 2007 and 8 times, almost 90% of the cases which I receive will have a credit card default. Then we say, no, go and pay to the, then other bank used to collect money. By putting a condition here, the other bank is making a money out of it actually. That kind of severeness was there during 2000. Then later, importance on credit card, all this awareness came. Now things are better when compared to earlier days. So don't settle your loan. Don't go for closure.
Okay.
Just a quick question here. Can I ask?
Yeah. Sure.
See, say for example, I have settled 3 loans. Okay, one car loan, one housing loan, and a personal loan. Is there a time period, say 6 years, 7 years, they'll be 14?
6 years, 7 years?
Will that will get recycled?
Normally now,
Will that
this
go off from my list?
CIBIL, so yeah, I got your question. Normally the old credit history will 4 to 5 years, no time. Normally 7 to 8 years, even 4 to 5 years timeline, it will be there. Suppose your new credit lines are not there, old credit lines will be showing in your account for some years actually, at least for 5 to 10 years. Even I'm seeing, recently today I got a case, 2008 CIBIL overdue is getting reported. 2008, almost 10 years back, 10, 12 years, 15 years back. So there are instances it has happened, but one point, your housing loan or car loan, all those things are settled, settled in the sense, fully paid off. There is no waiver taken, only interest waiver taken. Principal is not taken. You can write to CIBIL and raise a dispute, and you can move such loans.
Okay. Yeah.
Ranjith, there are two
Thank you.
questions from Sam DT. I think it is, I'm not sure who Sam DT is.
Myself, my desktop actually. Yeah.
Right. So is it safe to check CIBIL score in public websites, which is the safest method? Second thing is how to improve bad or low CIBIL score from 700 to make it better.
And it is my suggestion is to don't check in any private platforms. No, see what they do. No, they take your information. Like Balaji few minutes back told, putting a PAN card, all those information, which will lead to data leakage. These people will take this and they will sell it to others. Okay, it can be used for multiple purposes actually. Don't take in loan platform. Go and directly approach. You can CIBIL and purchase a report directly from CIBIL by paying the fee, which will give a clear-cut idea actually. And I can suggest one more thing. There are other platforms like Experian is there. There are other credit companies are there. That can be, I think now you can check your credit score in platform like Cred is there. Cred, you all know, you might be using Cred. So all your credit card payments and all it's getting updated, paid towards credit. No, credit is also a better platform because it's recognized by RBI. No,
And also, if we go to our home branch, they will check and tell us the score.
bank branch. Yeah, now suppose you are having a
Bank branch. Yes.
bank account. No, bank account. Even bank account by internet banking, you can go top right. No, it depends upon the bank. And ICICI Bank credit report purchase, you can directly click and you can get your report actually. So charges will get debited and you will be getting your report. That is also there.
Excellent.
So for some profile, it is free of cost. Depends upon the profile.
Perfect.
So Ranjith, I mean, I have asked a couple of questions, but I'm going to skip to some other very interesting questions. So Daniel Desmond has asked to brief on education loan. So that's what he's asked. And so Sam has asked another very interesting question, which is, does participating in non-banking entities like private lender, Marwadi, will they also come under CIBIL?
I will answer this actually. This education loan, I'll keep it aside because education loan now I'm yet to go into education loan because I'm not handling education loan right now because it's a centralized function. I will get back to Daniel separately on this. I will, if any help needed, Daniel can approach me because we handle this education loan from Chennai. Centralized processing is happening actually from Chennai. But I can help actually. I can get back with the details to Daniel separately, one-to-one. And with respect to the other query which you have asked about, which one? What one? Come back again on the second query.
Taking a loan from private.
The Marwadi, private financier. Okay. I got it. Private financier. No? See, only registered NBFCs, registered non-banking finance companies, and banks. These are the members in CIBIL actually. They are all members, agreed members. They are sharing the information which is getting recorded actually. If it is a registered NBFC, which will get recorded. If they are not an NBFC, private money lender like the state and all, that will never come.
Right. Plus the other thing also that I think, Sam, is even your payment to them, your loan repayment to them is not going to be through bank, it's going to be through cash. So hence it is absolutely Awala. So it goes everything, what you get and what you pay is all Awala. So that's not the banking thing at all. So hence does not come under CIBIL.
Definitely, it will not come under CIBIL preview because like rightly you told, it is cash and carry. Even if you are doing a cash transaction in NBFC or a bank, your EMI remittance is happening through cash. You are getting a proper receipt and it is getting reported every month to CIBIL actually. So we are, it is an automatic reporting happening from the bank side. No manual intervention. It's an automated report. Goes to the CIBIL continuously every month. And one more information on CIBIL. This month, the report changes every month, not frequently. because every month and after the particularly fresh report, you will get it in first week of next month. So reporting happens mostly during month end.
Right. So Ranjith, then I have a couple of questions here. So I'm going to ask both the questions at the same time. So one, I was asking about whether over also seen as a loan, and how does the overdraft work? Or is it, if it's the same or similar, what's the difference between an overdraft and a loan? That was one question that I had. I don't know if that is relevant and it's okay to discuss here. You can respond to it. Otherwise, I can take it separately with you. And
we can discuss.
The second question. Okay. So the second question that I had is, see, if you consider a situation where somebody who's got decent salary, who has loans and has been proper and has been paying everything on time, right? So CIBIL score probably is at a much better score. Now there is somebody who earns the same salary, but who has no loans or credit cards. So how does CIBIL impact him?
Good question, Balaji. Actually, the second one is an excellent question. I'll answer one by one. Overdraft, which you asked, no? Overdraft is also a kind of loan because this is a loan with a terms, actually. Terms will be there, and it is a kind of loan. The overdraft,
can you mute me,
overdraft is getting reported in CIBIL, actually. So CIBIL may whatever overdraft, no, OD taken on your behalf, no, it will reflect in your CIBIL, and you are not servicing interest, then automatically which will get reported as delayed pending days, we call it as DPD, which will have an impact on your CIBIL score. So overdraft is a kind of loan, actually. And there you will be paying interest only for the principal what you consumed. That is the difference. In a normal loan, it's a standard EMI. You have to pay the fixed EMI. Here, so whatever you are using principal, that for that amount only you'll be paying interest. That is the benefit of overdraft. So overdraft is also a loan, actually, and the bank will consider as a exposure only.
Right. Yeah.
And the second question, untested customer, that's your point, actually. Customer is having a very good track record. CIBIL score will show us 750 plus to 900. So green. So he will get loan. But the profile what you asked, he is having excellent income and everything, but no past credit history. Correct, Balaji? No past credit history. He has not taken any loan. CIBIL will throw a report called -1.
Right.
So CIBIL score will show as -1. -1 customer is from the bank perspective or NBFC perspective, it's an untested customer. So viewing an untested customer, we will not term it as a negative customer because he has never taken a loan. So definitely weightage will be given for his salary, income, and other thing. Definitely bank will lend the customer. -1 is not a negative score.
Right. Right.
You can see -1. Suppose nobody is taken any loan, no? Somebody is not taken any loan, it will show us -1.
Right. Right. So it's always better to have some loans, right? So
definitely a combination of mixture of your secured and unsecured loan will increase your CIBIL score.
Right.
Keep couple of credit cards, and personal loan and some secured loan.
Right. So since you spoke about credit cards, can you? Sorry, sir. Can I ask this question?
Go ahead.
Yeah. Since Ranjith, you spoke about credit card. So this morning, so you spoke about a credit card instance where sometimes you're getting shocked by seeing the current trend. So what is the current trend of credit card usage? For the benefit of the group, can you tell us that story, please?
Yeah, it is going up. Even credit card is a part of unsecured loan, and personal loan is also a part of secured loan. Okay, both are unsecured loan. It's also both are almost equal. The reason is this: no collateral, nothing is there. And present trend, what I'm seeing both in credit card as well as the personal loan, the loan amount quantum, particularly people working in IT sector, salaried profile, people are taking high quantum of loan, ranges from, I get an average of personal loan from 25 to 50 lakhs, 60 lakhs, 70 lakhs. 60 lakhs cases I used to get every day. 50 lakhs, 60 lakhs. Earlier, we used to call this 50 lakhs, 60 lakhs under mortgage, home loan, land loan. People used to take this large quantum against home loan or flat purchase or something like that. People are taking now, even the ticket size ranging from 25 to 50 lakhs now, quite often. I'm seeing very frequently seeing. People are started using the credit cards. You all know now, after the credit card and online buying is increased, credit card is the best place to use in online. Okay, you all know Amazon has come, Flipkart has come. So easy to buy a phone of 1 lakh rupee. So your limit gone immediately. So Amazon has tied up with ICICI Bank for a co-branded card. We are giving cash back of 5% for all the spends. You know, Amazon ICICI card is there. So these are all the factors, inducing the borrowers to use the limit, and they buy a lot of consumer durable or other usages. Even some people are taking cash also. Okay, so the utilization is increased a lot. People movement towards unsecured loan is going high actually. That is the reason recently now Reserve Bank of India has put up a control on all the banks, because Reserve Bank of India is monitoring all the banks closely on the unsecured lending part, which is higher the unsecured lending part, lower mortgage loans is not a good sign. You all know mortgage loan is a better loan. It is for the future. It is for the family and for the next generation. Home loan. Home loan is a investment, whereas your personal loan and other credit cards and all expenses actually. It is not an investment. So this is the problem. So things are it's on the wrong side only, but right time RBI has intervened and they put up control. We also, we are, as a bank and other NBFC also, they have done a lot of internal controls on giving unsecured loan. They have tightened the norms. It is not like prior to 6 months. A lot of controls are in place.
Right.
Okay. And the
Super. So Sam has got a question.
Yes.
Sam. Sam, do you want to close the session formally and then continue the question, so that it's only 9:40.
There are a couple of more questions from James, I guess.
That's okay. Somewhat, it's just not very.
You can ask.
Relevant,
Okay. Fine. You can ask. Not an issue. I'll quickly answer.
The question is, I'm using a credit card, and I always pay within that interest-free. What do you get? Period, right?
Within that time frame, 50 days or 55 days, you are paying.
So does that also amount to a good CIBIL score?
Definitely, you are paying see, there are two things to credit card. Whenever you get a statement on credit card, there is a two component to it. One is minimum amount due and total amount due. So suppose you are making a minimum amount due, not the total due, whatever you have spent during the previous month, which will have a impact on your score, because you are keeping an outstanding and you are paying, but still you are paying. But score what you get for the complete payment within that total amount payment, which will be higher when compared to paying minimum amount due. But you are paying minimum amount due on date prior to that due date, which will not have any bigger impact. But the difference between making total amount and the minimum amount is always there. So try to make total payment.